Good afternoon, everyone. Hopefully this is working. This is our first foray into the live event, but happy Halloween. And thank you for joining us today, where we're going to be breaking down the budget and what that means for crypto tax individuals and those involved in industry. I'm joined today by Technical Director of Crypto Assets and Digital Assets, Dion Dr. Death. I don't know how long you're going to be able to keep that mask on, Dion, because that already looks uncomfortable.
I think we were going to have to subject the audience to a much worse sight me out of the mask than keeping the mask on.
But yeah, thank you everyone for joining us. So my name's Ben. I'm a digital assets partner at Anderson, and I deal with both the tax and the accountancy side. Dion, would you like to introduce yourself?
Hi, I'm Dion Seymour. Deal with the more technical policy side of things. So get involved with everything that Anderson does.
Yeah, fantastic. So let's just start off. Let's start off light, Dion. What's your favorite Halloween? First, no, actually, no. I'm gonna roll back on that. First of all, I very much like your surroundings, and I was just wondering whether that's for Halloween or that's generally how you like to roll on a day-to-day basis.
This is how I generally sit here and I give advice. Pumpkins. A bit like yourself, I assume that the light flames are quite normal in your.
Oh, absolutely. No, absolutely. I've got my. I was sort of going for a pumpkin head type thing with my HMRC pumpkin, but instead I just seem to have more kind of like a sort of a Tucker and Dale HMRC face going on with the pumpkin. But as you say, it's kind of a daily ritual here where I'm sat. But what is your favourite Halloween film, Dion?
I don't know if it's about Halloween or more of a horror. I do like the ones like Coraline, the Tim Burton, okay. the really random ones, more so than these splatter flick like Jason.
Okay, I was going to say Coraline versus Saw. There's quite a difference there in terms of horror movie genre.
The later Saw shit got silly. The concept of Saw was great when it first came out, but then the later ones like Saw 25, and you're like, I've lost the will.
Yeah, that's fair. That's fair. I feel actually we could probably discuss horror movies for an entirely different webinar episode, so maybe we should do that. But let's crack on. Obviously, as I'm sure everyone is aware, yesterday was the budget delivered by Rachel Reeve, the first Labour government budget. And there was a lot of noise pre-budget about various changes that were going to be made to the tax system. Now, thankfully, we didn't quite see many of them come into effect. But Dion, I'm going to ask you a quick question. My family and I, we sit around the dinner table every day and we talk about our peaks and our pits of the day, the best things that happened to us that day and the kind of the worst bits that happened to us that day. So Dion, if I'm going to bring in my family tradition here, and I'm going to say, what was your peak and pit of the budget?
Well, I think it's all pick than peak. I think we've got very little to actually celebrate from the budget yesterday. It was one of the biggest tax rises that we've had for quite a while, since Norman Lamont, when 92 was the last highest budget book tax. We got penny off a pint, which, as people, so Anderson saying
that's a lot of noise, right? The noise went off then. At that point, it was like the biggest win in history. It seemed
it was carnage then, because that's all they could celebrate. That's all they could get behind. And yeah, there was very little else. People in the London office of Anderson were saying, "Whoa, it's £7 a pint as it is." So it's it's like, well, 99 now. You're welcome. Yeah, exactly. Fuel duty staying the same. I have to say those were some of the only peaks that we actually had, but there was an awful lot of coming.
I guess some of the corporation tax aspects staying the same as well. I get something staying the same a peak, maybe.
Yeah, I wouldn't think that's something to cheer about.
I think that's probably indicative.
Yeah.
Exactly.
I remember once I used to follow Coventry for City for football, and I remember once we managed to get a draw, and everyone was cheering like we had won.
What a peak!
Celebrating a draw like it's the best thing ever. So I feel like that. Keeping the CT rate, the corporation tax rate, at 25% feels like a win, when in reality, after the fact that we'd had such lower rates, and we're still not really competed against Ireland on CT.
Yeah, very fair. Okay, so we've talked about the peaks, although the somewhat lower peaks, less Everest, more hilly mound of a peak in the budget. But what would you describe would be the pits of the budget then for you?
Well, I think without a shadow of a doubt, and with the crypto focus here, also the increase of the capital gains rate. Now, a couple of things on that. So we've gone from 10% to 18% at the lower level and 20 to 24. It's not as bad as was feared when it could have gone to your income tax rate. So that could have been up to 45%, but there would be a whole host of other questions along that. So this is almost feeling like you should cheer. But the real shocker, certainly in my mind, and it's not something that anyone, I don't believe, really wanted, is the fact that it came in immediately whilst the Chancellor was speaking. So while she was speaking, she says, I've now increased the CT rate. And it was interesting that she actually said, I've now done it. So when they talked about stamp duty, she said it's coming in from, the 31st. But back when she said about the corporation, the capital gains tax, he said we've now increased it, and that was like, the government document said only 1% of the adult population pays capital gains. So then you're thinking, what was the whole point? Now you would bring in, and I'm sorry for those who don't know, so I spent 20 years nearly in HMRC, and certainly many of them in the policy land for crypto. But generally, you would bring in an immediate change to anti-distort any market shenanigans, so anything that might distort the market, so to prevent massive sell-offs. Now, if the argument is only 1% of the adult population actually are impacted by this, then that doesn't seem like it's going to exert the market, particularly when, if this is not aimed at the working people, and let's not get into the political debate about what working people are in this, if you're only then moving from 20 to 24%, so that 4% wouldn't really have distorted the market, it feels a bit more like just a cash grab at that point to me.
Yeah, agreed. And we were talking about this pre the budget, right? In terms of as an incentive, capital gains tax doesn't bring in much money, and typically when you raise capital gains tax rates, people stop selling. Now, whether it was a conscious decision to only move it a little bit, so actually you're not then affecting economic activity that would give rise to more of this, but it seems in some sense a bit arbitrary, especially sort of 24%. There was so much before, as you mentioned, that it would move to income tax rates, or it could move to dividend rates. That's what we were all bracing ourselves for. And whilst I appreciate there's a bit of a silver lining there, it's not as good as we had it 2 days ago. But that's kind of the interesting point here, because obviously things have changed from yesterday. How is that going to affect how we then go about reporting gains and losses this year?
This is the real joy, and this is why I don't think anyone really wants this. I don't think even HMRC wanted this, with the split year treatment that we were actually going to have. So part the way through this tax year, on the 30th, you're going to then have to separate the gains that you've actually made from the 30th to be seen differently, to be treated differently to the gains before. Now, if you have any losses, and let's face it, the last few years in the crypto space haven't been brilliant, so if you've got any losses brought forward, you can offset those against your higher levels first, so it doesn't have to continue to get set against the same tax rate, if you will. So you don't have to wait to make losses at this higher CG rate to offset them. You can use losses that you've already brought forward. There could be a question that you might want to have with your agents, and obviously Anderson are the best agents around, but for your previous years as to how much
unbiased.
Yeah,
I agree.
Yeah, how much you want to bring forward and how much you utilize for your current returns, and maybe even a swathe of amended returns needing to go in for the 23-24 tax year to pull back on people's losses to utilize them at this later point. But certainly it adds a complication, and I certainly know as from a tax inspector, anything that adds complication is just never welcome by HMRC, by investors, by anybody really. So
I mean, it's an interesting one, right? So for reporting purposes, where largely I would say, unless people's, and this is on a private client basis, so individual who's involved in crypto trading or DeFi or anything, unless you're at the sort of very simple end of the transactions, a little bit like me, I bought some a few years ago and I've not really done anything since. That's quite simple. But for a lot of people who are undertaking thousands of transactions a year, and therefore you're reliant on software to be able to try and help this. Obviously we spend most of our time is software does a great job at getting all that information into a package, but then you have to go through at a very detailed level to make sure that those transactions are actually reflecting what the activity that has taken place, because otherwise the result that it's giving you in terms of gains is not going to be accurate. But for anyone using that software, obviously this then creates a point throughout the year that the software is going to have to treat things differently, right?
Yes. And I do know that the likes of Recap have certainly, Recap.io have certainly been already had conversations with them around that. And I think they're already looking at how to do the split year treatment for their software. And again, it's that added complexity. And as you also mentioned, the annual exempt allowance for the AEA, which previously you could make up to nearly £12,300 at the highest point before you had to declare your gains, has fallen to only 3,000 now. So you are right, many more people now are starting to come into that scope. And I think this is going to be quite interesting, because more and more crypto users, I think, are going to feel that they're getting targeted here, because there can't be a level playing field, because you can't invest tax-free in crypto unlike you can with shares. So there are no ISA equivalents. So you can't use the ETF because of the retail ban by the FCA. There is no tax vehicle wrapper short of buying shares in a firm that does like mining, maybe a company that does mining somewhere. You just can't do it. So we've got a real disparity.
Yeah, and is that all of those things there where you've talked about tax incentive investment vehicles to shield and wrap certain asset purchases for tax purposes? Is that just government oversight? Do they hate crypto? Is it just not far up enough their agenda? Is it, what's kind of the reasons for that?
I think we've got.
If you were to.
So I'm also mindful about what I understand about the process in the background. So I don't think there's going to be any ministerial coverage of crypto at the moment from a tax perspective. I think currently ministers are going to be much more focused on what they see as the bigger hitting things, as we saw yesterday. And certainly, as many of the audience may know, that there was a push under the previous government to simplify the taxation of decentralized finance. Now that's completely dropped away, despite the fact that we were almost getting to the point of we had to call for evidence, we had a consultation. Certainly, Anderson working with Crypto UK and other bodies like the ICAW, we pushed hard on trying to get that done. But that's just disappeared. So that's either gone to the measures graveyard that the current government doesn't feel it is in their political interest, or ministers are looking in a different direction.
Yeah, I think that's fair. So I mean, it's tough, right? So whilst I'd love to be on this live stream saying there's some silver lining here, not only do we have the annual exemption at pretty much the lowest it's ever been, which is going to drag a lot more people into the capital gains tax net and therefore have a need to disclose. We've got software updates that are going to have to be required to deal with this. We're going to have to be thinking about where we lose those losses and against what gains, because we're going to have different gains in different periods of this tax year. So it's already looking complicated. Yeah, I think is a fair word without using any stronger language on this children-friendly live stream. I mean, what is there any silver lining here for crypto from this budget? Or does it just get worse?
I'm checking notes, but I'm struggling to find your.
I mean, I'm kind of leading you. No, I know. I
know. So we've gone through the split year treatment, and I think the only explicit mention of crypto in the budget was related to the crypto asset reporting framework, which is the OECD-led tax transparency framework that is ongoing. That is. For governments confirmed that they're going to be bringing that into the Finance Bill 24-25. They released the draft legislation yesterday, as well as a response to the previous consultation. Nothing staggering on the responses from the consultation. One thing that's notable is that they're going to be using the CARF framework for domestic as well as international reporting. So a similar automatic exchange of information called the Common Reporting Standard would get UK institutions to provide information to HMRC, which would then get sent everywhere else. So HMRC wouldn't use it for domestic purposes. The difference here is that you get information on UK individuals to be used by the UK Tax Administration. And again, so it's going to increase that feeling of scrutiny on individuals who have crypto. We've also got, outside of the crypto side, the fiscal drag, unfortunately, is going to continue. So this is where your personal allowances are not rising in line with inflation. And so the note there from the Chancellor was that the previous government had said about freezing the increase of personal allowances for a number of years. And then so they said they're going to keep that, but it's going to go up in a few years' time. So we're going to have to wait a few years before we see an increase in our personal allowances. Now, obviously, with inflation, we are seeing increases to our wages, but we're not seeing an increase to personal allowances, and we're getting more and more people caught by the higher rate than ever before. It used to be that the higher rate was only for a small percentage of the working population. Now we're seeing more and more people getting dragged into that box, which obviously has a whole knock-on effect with how much savings you can do tax-free, your dividends, all sorts. So it does.
And the CGT rate that we were just talking about there, in terms of which rate you're paying capital gains tax at.
Yeah. So
sorry, carry on. No, carry on.
Fortunately, the fiscal drag is another downside. I'm continuing to check my notes. The non-dom regime is coming to an end now. That some people might see as being a positive. It depends which side of the fence on. I think it's quite a polarizing concept for non-doms, but it's to be replaced by a different regime that focuses on residents as opposed to the old
citizenship. Well, I was going to say, I mean, there was a lot of noise yesterday around what it was going to be replaced with, and whether we're going to move towards a bit of a citizenship model like the US have, which just seems like it would be a complete nightmare to implement. We're not as big as the US. The US tax net is huge, and certainly the powers that they seem to pursue in terms of that are quite wide-ranging, quite powerful. But I wouldn't have assumed that the UK would have had as the same ability perhaps to rein that in. But I mean, obviously there's going to be more details on that released as we go on. Now, I do feel a little bit bad, and I have to own up here and be a little bit honest, because when I asked you if there was any silver lining, I kind of knew full well that there wasn't, but I wanted you to be the bad guy, not me. So, if we've even got any live viewers left that haven't just sort of, signed off because they're going to leave the country for a warmer climate where they might not have to pay tax on crypto. What if you sat here watching this and you think, gosh, okay, right, so all I've heard is it's more and more likely that what I've been doing in crypto is reportable, and we've got the CARF coming in, and HMRC are going to get information on people that have used CASPs, all that data on what people have been doing. I haven't yet reported or disclosed anything to HMRC about my crypto. I presume the advice here is to not continue to bury your head in the sand, because this is a solvable position. But what would you recommend to those individuals?
It's interesting, isn't it? Because crypto isn't being targeted specifically, and it's a more consolation that, unlike, say, the US, where they feel like they are targeting crypto users, this is more things that are happening around. We might see a further step change, not only with the information coming from CARF, from HMRC, but also that the previously published point that they're going to be adding boxes for crypto assets onto the self-assessment return is going to make it even more stark that if HMRC get this information that you may be invested in crypto through a reporting crypto asset service provider, an RCAS, somewhere in the world, and you've got nothing on your SA box and your SA return because your AEA, your annual exempt allowance is so low. And we could see a changing attitude towards HMRC as to the level of non-compliance. And so, yes, don't bury your head in the sand, because as more of this starts to happen, the penalties become worse. So arguably, it becomes to a point where HMRC look at your customer behavior, as they term it. And the more you bury in your head in the sand, the more likely that they're going to start thinking it's a deliberate behavior, it's a deliberate choice of you not to declare your tax, and so come after you for higher penalties. So that was the trick.
And do you think that's the rationale behind including boxes on the self-assessment return specifically for disclosure of crypto assets? Is that preparation for CARF? Do you think? Is it just to get more data? Looking around the screen, I know I'm throwing this out there. Is it just to understand? I appreciate that HMRC previously have conducted various surveys to better understand the individuals in the UK that are undertaking crypto asset activities. There was the report, you're on the other side of the fence then, but a couple of years ago that looked into behaviors of crypto asset holders and where they held them and the purposes by which they were holding them. Is this, and this is me trying to, this is the white dove of peace going out there. Is it, in your opinion, do you think it's, and you can feel free not to comment, but do you think it's more of a, actually, look, there's a lot here that we don't understand, and we've obviously got individuals that are reporting, but the way in which you currently report that on a self-assessment return is quite clunky. Even the box that says how many number of disposals have you made this year? Oh, well, actually, it's been 50,000. Thank you very much. We're used to that figure being a lot lower. Is it an attempt to modernize the return, find out more information, or is it just making way for that kind of check in the future where actually they are going to be receiving data and then they can tally it up? Cynical hat on or not? You can put your cynical Dr. Death hat on if you'd like to. Do this anonymously.
I think. I mean, there has been a request on LinkedIn or comment there about me getting the mask back on. So maybe I need to put the mask back on when I'm talking about what I do.
Okay, it's fair. Okay.
Okay. Gets affiliated with Anderson. So well, the changes to the SA form was something which I instigated. It was one of my measures.
It was you. You've admitted it. Right, okay.
For a number of reasons. One, I battled a lot with some parts of the department that just wanted to ban crypto. They wanted anyone who had crypto to go for a criminal investigation at one point. So I know I had to.
You went from villain to hero like super quickly there. That was amazing. You remarkably pulled that back.
And I went against senior civil servants at some point in the department. They just wanted to ban it. I'm like, you can't. This is.
Yeah.
But there was an event that got held at webinar through the British Embassy. I managed to crowbar myself onto that, but I was given a very high directive that I was not allowed to say anything. Because whilst they were talking about it, they said, who uses crypto? Criminals! And everyone was saying it's criminals, but they know that my stance on that was very different. And I was literally banned from saying anything in that.
Madness, isn't it?
So part of it was to highlight that, normal people do have crypto, if you will. It's not just criminals who have crypto.
Shock horror.
I know. There is an element of the demonstration of that. There is also a number of FOI, freedom of information requests, that always asking about how much money was coming in from crypto, and so you've always got to try to judge that tax gap. That information isn't and wasn't readily available due to the way that the self-assessment returns work, and then obviously you've got the CARF bit. So it's actually, so you do have that compliance side as well as information gathering side that says you haven't disclosed your crypto. So CARF is coming.
CARF is coming.
Yes.
Yeah. Okay, that's fair. Well, thank you for that. I wondered why your eyes were getting twitchy, and I thought, oh, this is interesting.